Welcome to the channel. I'm the Swedish Dividend Investor. Before we move on to the main topic of today, I want to start by thanking you all for the support. We have hit 250 subscribers, a huge milestone for me. It keeps me motivated to make more informative content, just like this. I am working on a 250 subscriber special, but I am quite limited on spare time, but I hope I can get that video out in the near future. If you're new here, we talk about dividend stocks and ETFs, and we do valuations, all with a sweet Swedish accent. So if that sounds like something you're into, make sure to subscribe and turn on notifications so you don't miss any updates. Also, while we're here, smash the like button for the algo. Alright guys, KLK00723 dropped a comment. What about Vanguard FTSE Developed Europe UK ETF and a bunch of stats? I have checked it out and figured, hey, let's do a video. On justetf.com we can get a lot of good information. I'm not sponsored by them, I just really like their site for the good info they provide for free. Hey, I'm a cheapskate. The ticker in this case is VERX. We are going to compare it to S&P 500, FEUI and SPYW. If we look at the 5-year performance, we see S&P 500 at 102.89%, VERX at 68.49%, SPYW at 58.74% and FEUI at 54.72%. Jumping over to their top 10 holdings, out of a total of 425, we can see SAP, ASML, Nestlé, Novartis, Roche, Novo Nordisk, Siemens, Allianz, Schneider Electric and Louis Vuitton. Hey, this list gives me déjà vu feelings. Moving over to the countries, we can see Germany, France, Switzerland, Netherlands, Italy, Spain, Sweden, Denmark, Finland and other. For their sector allocation, we have financials, industrials, technology, healthcare, consumer discretionary, consumer staples, basic materials, utilities, telecommunications and other. So, now we have an overview of the ETF. Let's move on over to the spreadsheet and take a look at their dividend stats. So, we have data going back to 2015. And guys, hold on to something here. This might shock you.
I am shocked. Shocked. Well, not that shocked.
If it isn't the same old with this ETF as the rest of the European ETFs. The dividend growth is all over the place, and as usual, we see a massive cut in 2020. We do, however, see a total growth of over 60%. So if you held from 2015, you would have a bit bigger dividend, but not even double the amount. So the price is sitting at 42.12 euros, and we got a dividend yield of 2.7% sharp. A bit on the low side for me, but hey, let's keep going. We can see the 3-year CAGR is sitting at 8.75%. Nice. 5-year CAGR at 3.48% and the 9-year is at 5.42%. Very nice. We can see the dividend this year so far, in March and June, is a bit bigger than the last year period. So let's do a valuation on this ETF. Why do we do valuations? We do valuations so we can guesstimate what kind of returns we could be getting based on historical data, and so we don't overpay for our investments. We are going to be using a 10% discount rate for each case. This is our annual required return. Starting off with the normal case, I've gone with 5.5% growth of the dividend for 10 years. Note that this is the 2024 dividend, since we don't know the dividend for the full year of 2025. I've used a terminal multiple of 33, so a yield of 3% at year 10. I think that's fair. We are looking at a present value of 32.57 euros. Compare that to the current share price of 42.12 euros. For the best case, I think I have been generous. going with an 8% growth of the dividend. Remember, we try to use conservative number, and if it still works out, we should be buying it. But I do think 8% is still not very conservative. Let's just roll with it. Terminal multiple of 37, so a 2.7% yield at year 10. We get a present value of 42.77 euros. So that would mean we would need a growth of at least 8% and the yield to stay at 2.7% when the share price goes up to make 10% per year. Let's go with the worst case. Now, even here I'm a bit generous, not counting any cuts or stalls. I gone with 3.5% growth and a multiple of 30, so a 3.33% yield at year 10. Present value 26.22 euros. And as always, since we don't know the future, we will use a mixed valuation of all three cases with a probability factor for each case. I've gone with 60% for normal case and 20 each for best and worst case. We land at a fair price of 33.34 euros, and with a 5% margin of safety, we get a price of 31.67 euros. Let's try to change the discount rate to see what kind of returns we could expect if we buy at today's price. We change it to 7% and we get in line with today's price. We could expect a 7% annual return if we buy today. Let's change it back to 10%. I want to show you something. Let's just enter the 8.75% on the 3-year CAGR in the best case scenario and change the discount rate to 11%. As you can see, the price we should pay is 41.75 euros, not very far from today's price. These valuations aren't 100% accurate. They are based on growth numbers, discount rate and a terminal multiple. What do I mean by this? I mean, this could play out. Heck, they might even grow their dividend with over 10% per year, and that changes everything. But is it likely to happen? I don't know, and neither does anyone. All we can do is make educated guesses, and in my case, use conservative numbers. And like I said before, if we use low and easy to achieve numbers and the calculation still works out, I would say that is far more likely to happen. So, what conclusions can we draw from this? I would say, either you roll the dice, check the planetary alignments and hope they grow their dividend at a much higher rate, or hope for a serious market correction and buy it cheaper with a higher yield, so you don't have to wish for the dividend to grow faster. I know, I am boring. Nothing is ever a buy, but the opportunities comes around. We just have to be patient. Currently, the market is hitting all-time highs, so I would say the risk is to the downside. Sit on your hands or choose a better investment. We can take a look at FEUI and SPYW. Even those are getting a bit overvalued. If we look at SPYW, they are sitting at a 7% return. And jumping over to FEUI, they are sitting at around 8% return. I'm keeping all these valuations I'm making, and in the future, I will do a watch list with all the companies and ETFs I go through, and I will put their intrinsic value next to their share price so we know when to buy. And I will update that list every year, but that's a future project for when I'm not overrun by work. Guys, if you have any suggestions, stocks or ETFs, European, American or international, drop a comment and I will check it out. And if it's interesting, I will do a video just like this. But that's it for this one. If you enjoyed this breakdown, make sure to hit the like button, subscribe for more dividend investing content and drop a comment down below. I reply to every comment, off topic or on topic. Sometimes YouTube filters my comment so I can't see them, so I have to manually check the comments page on my YouTube studio page. If I'm slow at replying, this is the reason. I'm the Swedish Dividend Investor and I will see you in the next one. Stay smart, stay patient and keep stacking those dividends. Ha det gött!